Hello, welcome. This is Pat O'Meara. I'm the chairman and CEO of Inveniam, and I am pleased to be here with Claus Skaaning. Claus is the CEO of DigiShares, and we're also going to have Adrian with us in just a moment from the Blockchain Fund. We're here together in Copenhagen, where Adrian hosted me yesterday with a blockchain event where he gathered some of the institutional investors here in the country for a meeting. And we're super pleased to have Claus joining us on this webinar, and Adrian, who's going to be popping in momentarily. But Claus, thanks so much for joining us, and maybe give us a minute about your background, and then we'll go into tell us a little bit about DigiShares.
Yeah, no, it's a great pleasure to be here, and I didn't have to travel so far to get on the call. It's amazing to meet you here in Europe and in Denmark. Of all places, that wasn't really my top expectation. So that's really nice. Thanks for inviting me to be on the call. And of course, we know each other. We've been sort of part of the same ecosystem for several years, right? We've been on panels together with some of your colleagues and so on, and we know you quite well. So it's a great pleasure to share this discussion here today. My background is really as a researcher. I have a PhD in computer science and with a specialty in AI. But from the old days, so before the time of deep learning and ChatGPT, and in those days AI wasn't so hot. But my first startup company, I left academia quite soon after getting my PhD, and actually I became CEO in a spin-out from Hewlett-Packard, focused on using AI to troubleshoot and diagnose HP servers and software and printers and so on. And I headed that company for about 10 years, after which I left. I wanted to try something new. And I worked at university for some years as an innovation consultant. And then I sort of started looking into blockchain, mostly as a career exercise, I would say. And with some co-founders, I started a few different blockchain companies about 8 years ago. And eventually sort of understood that tokenization, representing securities and assets on the chain using tokenization, could potentially really become big in the future. We could see 5 years ago there were really few providers of solutions, and the solutions were really primitive at that time, but still extremely expensive. So we thought that it could be a good business. So we basically decided about 5 years ago to go into this area and start developing great technology for managing the tokenization process in a wide level type business model, so that asset owners, real estate developers, investment fund managers, and so on could get their own solution to manage the tokenization process in order to create, to fractionalize, to automate, to reduce costs, to create a liquidity right for their investors. So that's how we started.
Wonderful. Well, I'm looking forward to this conversation. We're going to have an enormous amount to discuss. And Adrian, thank you for joining us, my friend. Adrian is with Blockchain Fund, and for full disclosure, Blockchain Fund is an investor in Inveniam, which we're deeply thankful for. But Adrian, why don't you tell us a little bit about yourself and then the Blockchain Fund?
Absolutely. Thank you, Patrick, for having us. And thank you for coming to Copenhagen for our event yesterday. That was beautiful. Patrick just did a great presentation showcasing Inveniam. And I think the crowd really likes this way of picturing how you can actually utilize some of these concepts that we're going to be talking about today. But my background is that I actually work for a multifamily office here in Denmark. I head all of our alternatives investments. And within that is an idea that we need to future-proof these portfolios. So thinking 10, 15 years down the road, how do we need to be exposed so the portfolios that we have today are in shape 10 years from now? So 3-4 years ago, we sat down and strategized about 4 or 5 themes of how we could future-proof these portfolios. And one of the themes that we really wanted to be exposed to was blockchain. But we couldn't find the right exposure because working for a multifamily office, we're not seeking 90% volatility as there are in crypto. And we couldn't just buy any listed companies. So we had to kind of think very strategically about getting the exposure into blockchain. So we created a fund-of-fund structure which today we're not that great at coming up with names. It's called Blockchain Fund. So we're a fund-of-fund structure that invests in predominantly funds, but also have the capability of actually going directly into companies. And yes, for full disclosure, we have invested directly into Inveniam as well, and we're happy to be a part of the journey.
And you have had 2 funds now, and you're getting ready for your 3rd. Is that right?
That's correct. So we've had the first fund was mainly for our multifamily office clients. The second fund we opened up for kind of our small little network here in Denmark, a very small country. So we're still thinking about how blockchain is actually a thing. If you read the media here in Denmark, unfortunately, it's still a little bit negative when the blockchain word is used. So we're trying behind the scenes to talk with the institutional clients we have here in Denmark, and also some of the bigger institutions, the government as well, to try and help them bridge this knowledge gap there is between the technology side and what they can actually use it for.
Fantastic. Adrian, I'll start with a question for you, and then Claus, I'll come back to you. But Adrian, talk a little bit about this wonderful conference you had yesterday. There were 4 of us as primary speakers talking about not only thematically investing in blockchain via funds, but also individual companies and the benefits to institutional investors. Talk a little bit about who your audience was, who you brought into the room, and kind of what this educational effort is that you're undertaking here in Denmark.
Yeah, so to use a very famous line, I think we're far behind the curve in Denmark in terms of adopting or investing within the blockchain universe. So our goal with the conference like yesterday is to bring in institution-like investors into a conference and bring in the likes of Inveniam, the likes of some of the biggest funds within the space, to come in and simply educate or tell the story and give insights into what massive opportunity blockchain might be 5 and 10 years down the road. And I don't think we disagree on this call that a lot of the financial world will be touched by blockchain in some shape or form within the next 5 to 10 years, and certainly within this decade. So we're just trying to help bridge this knowledge gap there is between the Danish media and what reality is, because there's a huge gap in terms of people's understanding of the massive opportunity and the massive digital transformation the financial markets are going to have over the next coming years.
Yeah, Claus, you live here in Denmark, and it's great to be with you. But you actually, I think you said, flipped to the U.S. a year ago, right? And DigiShares is a U.S. company. But tell us maybe 2 things. Why did you go to the U.S.? Question number 1. Question number 2. Who are your clients, and tell us about your product specifically. What does it do? Who do you target, etc.?
Yeah, maybe we should have spoken to Blockchain Fund, but we didn't at the stage. And I think that generally speaking to the VCs here and investors in the Nordics, I would say as a whole, right, it's really, really difficult if you have working in the crypto or blockchain space. They're quite conservative in my view, and even though it could potentially be the future infrastructure of the financial ecosystem, right? They don't understand it, and they don't want to invest into something that they don't understand, right? So that's one reason for flipping to the US. The other reason is that the US is by far our biggest market, where we see the biggest interest. So out of the 150 plus clients we have, maybe 40 or 45 are in the US. So there's a lot of interest from US clients. And I think one of the reasons, of course, it's a big country, it's a large market, but it's also the easiest, I would say, country for us to operate in from a legal perspective. We have clients in more than 40 countries, so we are quite aware of the global regulation concerning tokenization. We tokenize shares in an SPV that owns the underlying asset, and tokenizing shares should really be quite easy and easy to understand for regulators, but it in many cases it's not. But in the US, you can easily do it. It's recognized how to do it. The legal firms understand how to do it, and they can do it easily and at relatively low cost, as opposed to most European countries and most Asian countries as well. Right? So it's an easy regulation for us to work with. The SEC is negative towards crypto. That's right, but they want everything to be securities, and when you tokenize real estate, it always becomes a security. So you just have to acknowledge that you work within securities regulation space, and then you're safe in the US, and there's no risk, I would say, generally.
And these 150 clients that you have, tell us about them, right? These are small to medium sized companies that are raising capital through securities issuances, et cetera, and maybe give us a little bit more detail about them.
Yeah, so it's a mix of small, medium-sized, and quite large firms. So we have one of the largest real estate developers in Dubai as a client. I cannot say in public who it is, but I hope that we get them on the stage on our masterclass in Dubai in a few weeks, so we can finally reveal who it is. But we're also working with Market Space Capital, a US Texas-based real estate developer with 400 million assets under management. Grant Thornton, the accountancy firm, is a partner in one of the projects that we are working on in Europe. Quite positive about the tech. We're also working with a large private equity firm. So there's a number of quite large clients that we work with. So we have the white label business. So in many cases, our clients prefer to not reveal, publish that they are working with another company's tech. They want to have it understood that they use their own, they develop it on their own. So that's a problem sometimes in publicity around what we're doing. So those are sort of the types of clients that we work with, and we have identified sort of 3 use cases basically for what they use it for. One is to sort of automate, reduce administrative costs, make your internal processes more efficient, manage investors, manage share cap table, manage internal settlement and trading and so on, and distributions. That's the first use case, very low-hanging fruit, easy for everyone to do. The second use case is to use it for fundraising, right? Like an STO, security token offering. This is probably the most popular use case at the moment. We have many clients using it for that, but it's difficult generally, right? Tokenization itself doesn't make the asset more attractive. It makes it more liquid, and that can help in some cases, right? But generally, it doesn't really help that much. But it can manage the entire process and make it much easier for the company that is fundraising to do it in itself. And we have many clients using it for this purpose. The last use case is to make the asset more liquid. This, I think, will become the main use case in the future. So basically, we have, for instance, Market Space Capital in the US. They tokenized one of their properties, multifamily property in Dallas, on our platform, and then they listed it on T0, the exchange, to get the liquidity. And this is, I think, quite expensive still to do, and there's not much liquidity in the market at the moment, but it's coming. I think it's multiplying with a factor 10 every year. We are also bringing our own exchange to the market to help push that, right? So we get the liquidity that we need.
And I want to take a minute talking about this your own market in the U.S. and how you're doing that, and not only the regulatory, partners that you're using to bring that to market, and I think you're partnering up with some of our friends to do that, but also who are the targets? How do you want to get there? But I think this gets to really, Adrian, something you were talking about, right? That we have to do a lot of tilling of the soil, right? Where we're breaking it up so that as we plant the seeds, the soil is ready. And in some cases, we're still tilling the soil. In some cases, we're planting the seeds. In some cases, we're watering, right? And I don't know that there's a lot of harvesting, right? But some are growing and look to be about to yield fruit. So maybe, Adrian, talk a little bit about blockchain fund. You've had 2, you're about to have a third. What are the types of companies you look to invest in? Why was the blockchain fund so compelling? Because the multifamily office that you guys run in, you don't have any other funds that you have created. It's just you wanted exposure. You were a believer in the segment, You couldn't find what you liked, so you put together your own fund for your clients. So as you go into number 3, tell us about what number 3 is going to invest in, and what is the work that we need to do collectively as an ecosystem to get blockchain adoption happening.
I think adoption is happening, Patrick, and you know that better than anyone else. But I think from a headline perspective, blockchain still needs this killer application. We just had this new killer application in AI, and that's when the public narrative actually changed with ChatGPT coming out. And I still think we're missing this killer application within blockchain for the regular person to actually adopt some kind of a blockchain technology. So we're still in need of this killer application. Where we can see the low-hanging fruits is within the financial markets, because the end consumer will not necessarily have to understand that the blockchain is the rails that they are operating on. It's for the institution to actually acquire this technology and start utilizing it in-house. I think one of the early success stories within tokenization or within this space has been stable coins, for better or for worse. It is really the first real world asset that has been tokenized successfully and works. And I think moving on chain is a natural evolution for even the equity markets, where something as easy as settlement can just happen a lot more efficiently, where today it can take 72 hours for an equity to settle within blockchain or within the rails that we're trying to build here. You can have a settlement happen instantly. So still there's a lot to be built, but I think it is being built at a very rapid pace, as Claus is alluding to. And those are the kind of opportunities that we're looking for. The picks and shuffle infrastructure that still needs to be built for the whole world to be tokenized at one point.
Yeah, we look at Figure, right? Who's done a good job with home loans and HELOCs, home equity lines of credit, that they're originating online. That's a Provenance blockchain solution that Mike Cagney, who is the founder of SoFi, created. And Mike's done a great job. And one of his great statistics is that on the trusts in the audit alone, you're saving per trust, where you have these securitized home equity loans, you're saving $250,000 to $1 million a year in audit fees, just by putting all of this online, having that accessibility. When you're talking about private equity funds, you're talking about saving as much as $400,000 a year in those audits and pulling all that information together. So there's really enormous opportunity for efficiencies and cost savings while we prepare the way for these secondary markets to form, right? And these secondary markets form that you need good data, you need good accounting, you need pre and post trade servicing, you need to create the digital instrument itself. In that creation of the digital instrument, good data, price discovery yields the ability for secondary markets and primary issuance to really perform at scale. And Claus, you guys are leaning into this, right? Not only creating the white label software for people to tokenize, but also moving into creating a marketplace in the U.S. Talk a little bit about the marketplace in the U.S. What is the area of focus for that? Yeah. And how are you kicking that off?
Yeah. Allow me first to comment on some of the earlier questions. So education is extremely important right now. So we're doing 10 webinars this year and maybe 10 masterclasses in Dubai, Hong Kong, Korea, Miami, Las Vegas, and so on. So for us, it's extremely important to educate, motivate, spread the word, explain what we're doing, right? And that's important for all of us in the space. So we're trying hard. Then I would say on the killer use case, JP Morgan and BlackRock sees tokenization as a killer use case, the next killer use case. I really think it is. I think it's going to happen. So let's cross our fingers for that. And then finally on the exchange, right? So we want this to be a retail-oriented exchange. It should be open for anyone to trade. We want to open up access to real estate, real-world assets as an investment object for retail investors. Really, we think retail is sitting on 40% of global wealth. So getting all that money into real estate will impact quite a lot. And it's also important, I think, to give retail the capability of diversifying into real estate and learning how to do that and actually protecting their savings and growing their fortune, right? Growing their wealth in this way. I think that's an important motivator too for us. So it's what we are launching. So we are a blockchain company, right? So what we are launching is initially just, you could say, just an order book marketplace with peer-to-peer trading direct from wallet to wallet, using stable coins to buy real estate-backed tokens. That's the first exercise for us to get that off the ground. In the US, we are going to run under the license of Texture Capital, dealer and ATS license, and we'll be using that to get off the ground, and then long term we'll possibly get our own. In Europe, we are applying for securities dealer license that can be passported across Europe and will give us the same capabilities basically. But we will actually also possibly be able to list European companies in the US, right? So even from the US, we might cover globally, which is quite nice, I would say. Just to finalize, right? So we are not leaving at an order book. We are a blockchain company. We want to do more advanced stuff, right? So the next exercise for us is an AMM, automated market maker. We're developing together with Balancer, which is the leading tech company in this field. We will actually have liquidity pools with real estate-backed tokens and our own BREC token, and of course USDC and BAL and ETH and so on. That'll be quite nice. We're saving that for later because I would say technically we can do it already now, but legally it's extremely complicated.
Yeah. So I'd love to dive into that AMM function that you're building. We're spending an enormous amount of time on that as well in two countries, helping set a mark, so that there's a daily AVM, so that we can have an automated market maker, which is creating an orderly market, not so that something can trade 24/7, but so it might trade 15 to 45 minutes a day, right? But people are going to be able to redeem shares at that price. And I love to hear that you're working on that as well. You're doing so many wonderful things. I think the white label software that you're building so people can do this, the ability to then seek a marketplace where you can list these things both in Europe and in the US are incredibly important. Let me ask a question. When somebody tokenizes, will these tokens be able to be listed only on your marketplace, or will they be able to be listed on multiple marketplaces, right? Will there be the ability to use a Sushi Swap or a DEX, or use an ATS like OPM or Rialto that we are investors in? And by the way, because it's such a small world, right? Adrian and the blockchain fund, they're investors in Texture, right? So it is this very small world that we're in. But these, we want to talk about not just walled gardens, but a networked world.
Exactly.
How do these tokens that your clients are issuing, what chains do they live on, and where will they trade?
Yeah, it's a great question. We believe in interoperability as one of the key underlying visions with the blockchain, right? So everything that we develop should be interoperable and should be building blocks in order to create a large ecosystem that functions well and provides great value. We support, I think, 5 or 6 or 7 chains right now, but most of them are EVM-based chains like Ethereum, Polygon, Binance Smart Chain, Phantom. We're also soon supporting Polymesh and Ravencoin. But the exchange will initially be on Ethereum and Polygon, I think, to keep it simple, and that's also where most of the tokens are, right? But the exchange is launched as a separate initiative from our company, right? So anyone will be able to list on it. It will not be limited to DigiShares clients, of course. Anyone will be able to list. We are going to support multiple protocols, multiple chains, longer term, right? So initially it's ERC 1404 and ERC 1400, but we can easily add support for other protocols. And we really want to make it open and accessible for everyone. And the same thing is true for the tokens, right? You can list them anywhere on any regulated exchange that is licensed to trade securities, right? You can list them. We put no restriction on that at all. That would go against, I think, the idea behind the blockchain.
Yeah. For sure. And I think these walled gardens where people are creating a token that can only trade on one exchange defeats the entire purpose of this. I love to hear, I think you mentioned BNB, which is a Cosmos chain. I love to hear that. I love to hear Polymesh and our friends at Poly, the PolyX coin, and, Trevor and those guys, Vince at Polymath, who've been in this from the very beginning, and they continue to iterate and get better and get smarter. And really, those guys are some super neat innovators. And I really want to also comment on Ravencoin. I think Ravencoin as a proof of work chain, there at some point when we start to have more and more assets, proof of work is going to matter for the largest institutions, right? And having these staking consensus mechanisms are great, and they're efficient and they're wonderful, but there also is a concern that we will need to interoperate with proof of work as well. Yes. And as we anchor into a proof of work and proof of proof of work and proof of stake chains, that multi-anchoring provides a really heightened sense of security, right? When you can live in two chains at once. And I'm a big fan of Ravencoin because of the proof of work function, and I don't need to get too much into that, but it is important, and I think that more and more we're going to need to look into that. But I think that's probably not even a 2024 question; that's a 2025 question. And so, with that, let me go back to you, Adrian, for a little bit. Right? Talk to us a little bit about the types of things that you invested in Blockchain Fund 1, right? You had 10T and 1RT is here, who was speaking. You had Schiller. I was there at your conference. Humla Ventures, right? There was some really neat people that you had here at the conference. Adrian hosted a lovely dinner. I had dinner with one of the co-heads of the largest pension here in Denmark last night, and just a lovely conversation about alternatives and using the blockchain and seeing the real value proposition. So this education is being fruitful. But as you looked at this kind of, we've got to till the soil with education, but you also have to make your bets, right? Tell us the bets that you made, Adrian. Some of what the ones, and we're happy for you to give a confirmation bias. So tell us about the bets you made that worked.
Yeah, absolutely, Pat. I think from our perspective as a multifamily office diving into this space, it has been extremely important for us to have the right kind of diversification, because in all honesty, I'm the newbie within the room. I have no idea what's going to happen 5 or 7, 10 years from now. So being exposed to different sorts of verticals within the blockchain universe, as we like to call it, is extremely important. And we've tried to build a macro thematic investment opportunity into this global digital transformation for our clients. And I think having an exposure in the private markets between 60 and 120 companies is extremely important, because you can dive into different verticals. You can dive into the regulatory aspect. You can dive into the tokenization aspect. You can dive into the trading aspect. So that has been the most important driver for our decision, is the asset allocation within the fund that needs to make sense across, so we can get into different types of verticals within the blockchain universe. Because firstly, it will probably most likely be a financial story, but at some other point in time, it might also be a artist story or a creator story, like the investments we've done in Sam and Schiller. So there are a lot of different opportunities to use this kind of authentication and transparency that the blockchain brings to our world.
Yeah, and just to follow up on that, Adrian, you guys have partnered with some superstars in the sense of Dan Tapiero and Tad at 10T and 1RT, right? Those guys are literally superstars, and they're I think they have about 1.2 billion that they've invested in. You guys allocated into them. They're going for a third fund as well right now, and I have to tell you, their portfolio is fantastic, super smart. But maybe to brag for a minute on one of your other partners, David Metcalf, who sits on our advisory board, is an investor in us, and he ran NASA Labs, the communications lab. And one of their goals was to deliver communication to Mars. And when you're doing communication to Mars, that they're solving for, the goal was not to literally deliver radio, microwave, laser does not work because the lag is too long, right? So how do you have instantaneous communication? And David, this is when he first got into entangling atoms and quantum physics. Is he working? And I think this was University of Edinburgh. They entangled two atoms, flew one of them in a tank of liquid nitrogen to Copenhagen, and in where we're sitting today, and using two entangled atoms, they were able to communicate back and forth between each other before the entanglement broke, communicating where they were speaking to one another from Edinburgh to Copenhagen through two entangled atoms and listening to each other speak, even though there's not the theoretical framework of understanding what causes the entanglement and what actually causes it to disentangle. And, Max then later wrote the quantum gateway software for one of the largest quantum computers in the United States that's owned by the government. He runs a number of really cool institutes, and he's one of your partners that you use doing. And David is the one who first got hooked up with us, how we met you guys, in looking at lattice-based cryptography to protect blockchain against quantum attacking. And this is what I really like about Blockchain Fund. You guys find smart people, you partner with them, you engage with them, and you've done just really a fantastic job. So I wanted to brag on David and some of the partners that you have.
Patrick, let's be honest. I'm a finance guy. I speak Fugazi every single day. I have to team up with the likes of you and the likes of David and Max down in Florida, or the likes of Tad and Dan from 10T1RT. So we're just humbled that, and maybe a little bit lucky that we were some of the first institutionalized players within Scandinavia and certainly Denmark to go into the space, because it has provided us with some of the networks that are invaluable for us from an investment standpoint, because we get access to some of these deals that, quite frankly, we're too small fish in this big pond. So we're just super happy to be having this network of these people.
But Claus, this really gets to it, right? It is the network, right? It's the network that matters, right? You know, there's the famous phrase, you can fork the chain, but you can't fork the community, right? Yeah. And I think that gets to this whole network effect of companies like ours working with one another, trying to facilitate a distributed global economy for alternatives, for private market assets, sitting on blockchain, being tokenized, being traded, and getting there. And Claus, I think that really gets us to, we're here in Denmark, in Copenhagen, trying to build a network, trying to grow a network, Inveniam being here, meeting with some of your sovereign wealth funds, as well as, or your big pension funds, I should say. They're not really sovereign wealth funds.
One of them.
One of them. Okay, thank you. And so this process is one that we need to continue to invest in. And I guess, Claus, what I want to hear from you is, where are you investing? Where do you see the growth happening in the next 12 to 24 months? Not next week, but the following week, I'm going to be in Abu Dhabi again. You're going to be in Dubai, I think, in 3 weeks, right? You've been mentioning where you're going. Where do you see the uptake happening right now?
Yeah. To comment first on what you said about developing an ecosystem here, right? So we are often asked by new clients, prospective clients, why can't we just use your solution without tokenization, without blockchain, right? One quick answer is you can't trade, for instance, right? You'll not be able to do counterparty risk-free trading, right? Peer-to-peer, that's not possible. But then I would say the main reason is actually that you will become part of a global ecosystem, a network of innovation across the world, right? Developing interoperable pieces that will replace or make more efficient the existing financial ecosystem, right? It just become so there will be room for so much innovation happening, right, that you will become part of this. If you don't use blockchain for your application, right, it'll be siloed, basically. So that's, I think, one of the main reasons for going with us. We are definitely investing in the Middle East, I would say, right now, the UAE, but also Saudi a little bit. The region is really interesting for us. We see it opening up to tokenization. We see a lot of interest from both the regulators and the government. So we've sort of been cultivating our network in that region for quite a while now, and we're doing regular masterclasses and events down there. And we see massive interest, I would say. It's really booming. What's been keeping it back until now has been also the regulators, right? The 4 regulators in the UAE, they have been positive towards this, but not really opening up. But it's coming now, it seems. Then we're also investing in Southeast Asia, so especially Hong Kong. We used to look a lot at Singapore, but I think Singapore has really sort of introduced regulation, making it a little bit harder and more expensive to tokenize. Now Hong Kong seems to be taking the lead. It's been selected as the crypto lab of China, we think. Yesterday or 2 days ago, China actually came out with a positive message about tokenization, right, which is huge news for us in our small industry. So Hong Kong is also a place that we'll be focusing on, and we have local partners, and legal partners, marketing partners, sales partners in place. So we are sort of ready to profit from that. And
Claus,
in Europe, we also see interest. Yeah.
Yeah. Talk to us a little bit about, as we were talking about Asia, Taiwan, particularly South Korea, and India and Australia. Inveniam, we're doing a lot in India and Australia, particularly. The regulations in Australia are a tailwind, we believe, for Inveniam's unique solution, tokenization. They've been looking at blockchain. They are looking to cultivate small corporations and providing liquidity for those, as well as facilitating the superannuation funds investing in these types of smaller entities, as well as what we hear in India, particularly through Gift City, in that unique offshore jurisdiction that they call it an offshore-onshore jurisdiction. Talk a little bit about those other jurisdictions as well. What kind of exposure do you have there?
You know, Australia is also a good market for us. I think we have 6 to 7 clients, and generally there's a positive stance towards tokenization. I think the regulation supports it to a good degree. So we get quite a lot of leads from there. India is another story. We have Indian clients, but they are sort of using the system without blockchain and without tokenization, and more in a fiat only way, while they are waiting for sort of getting permission to use crypto and stable coins and so on. In India, it's not really supported now, as far as I know, right? So we have a legal counsel who's in charge of this, but there's a lot of interest, right? We get many requests from India, but of course they have to be compliant, right, with local regulation, and we have to inform them that it might be difficult in India. Maybe they should choose to have an US-based SPV in order to tokenize Indian assets. That works. So there are ways around it, but it doesn't make it easier, right? You have US legal expenses.
Yeah, that's right. That especially if you're not going to get a lot of US investors in, and I think that the Gift City, particular their unified regulator, IFCA. Is the leader in where tokenization in India is happening, and I think what I'd like to do, maybe moving this conversation forward, Claus, is those are interesting locations. We're seeing some more tokenization. Talk to me about kind of coming home and in Denmark, right? There's been you mentioned you have one client here. And Adrian, we talked about this yesterday a little bit, right? There's a little bit of a negative view towards blockchain and tokenization, that it's viewed as maybe not quite right or proper, and we're needing to do some education. And what is your view on maybe what are your hopes, right, for Denmark as it relates to tokenization? And maybe Adrian, I'll start there with you and say, talk to me about what are your hopes about blockchain adoption in Denmark? What would you like to see in the next 12 to 24 months? And then Claus, I'll come to you on that as well.
Claus, I think actually you're better at answering this than I am, and I can certainly talk about my hopes, but Claus, please.
Yeah, I have to say the Danish regulator is extremely positive and supportive of everything we're doing. The Danish FSA, we had a great collaboration with them, and they do a great job. The Danish National Bank is negative, and the banks are generally negative, right? And it's even forbidden for employees of the banks to own crypto. So there's a generally quite negative attitude. I did do a presentation for one of the big banks a few months ago, so maybe it's starting to change a little bit. I also would wish that they could separate blockchain infrastructure from crypto in itself, right? Which is two totally different things. That would be great. We have one client in Denmark. I think we have a few in the rest of the Nordics. We haven't done much out of marketing here, but in fact, Denmark has a great regulation in relation to tokenization. It's fully supported, it's easy to do, and it's recognized by the security regulation that you can digitize the share cap table, the share certificate, the share itself, and so on. So it's actually fully supported, and it's easy to tokenize here, and it's inexpensive compared to Switzerland, for instance, right? But we just don't have a large financial, or say, ecosystem and infrastructure here to find investors and so on so easily. So it's maybe not a good jurisdiction for that reason. But we do have a single client that has recently tokenized the property in a city in Denmark and is moving forward and sort of really starting to obviously educate the Danish real estate industry. And we've used them also as a use case in other countries, and it's actually quite impressive what they have done. So a great use case for us and for Denmark, I would say.
Yeah, and when I think about the Nordics and you particularly, this region has been a leader as it relates to alternatives and being an early adopter of alternatives in many ways. And I'm hopeful for that. While there's that wonderful, great regulation, and I particularly would point out the Swedish regulation, right? A regulation without an ecosystem of partners to actually get things done is almost meaningless, right?
Yeah.
And so we need these partners. We need the pensions to begin using blockchain to value their assets and get better data and see the benefit of it. In order to start the creation of these things sitting digitally native, right? And so I think the bridge on how we get to digitally native alternatives trading is some of these applications around price discovery, some of these applications around data, but also it really is interesting because I think these hype cycles around crypto, even though tokenization is different, there's a meaningful correlation. There's no way the psychology is tied for sure, right? And so understanding that it's a reality, and we're really hopeful being here. I think one of the things I'd like to do is open this up for questions. I'd ask the audience, anybody who's listening, if you have any questions or comments, please let us know. But we are looking for, and I want to say this on behalf of not just myself, but Claus, if you'll permit me to say this, for you and DigiShares and Adrian, if you'll permit me, for Blockchain Fund, we are looking for partners in the Nordics, right, to engage in blockchain in order to do more. And particularly, I would suggest Open Zeppelin, who we have a long-term relationship with, that has meaningful stakes and origins, right, up here, that there's opportunities here as we expand into real world assets and real world asset tokenization and doing that. And Claus, tell me a little bit about tokenization. And there's recently Securrency was bought by DTCC, right? And there's another asset that's in play right now of a big company that we know, that we're all friends of. That there's a meaningful announcement, I think, coming out in the next couple of weeks. Talk a little bit about the landscape around you, right? How is that forming up? How is that growing? How do you see that landscape? And how do you work with those guys, right? Because this ecosystem with different partners, Polymesh that you just mentioned has Polymath, right?
Yeah.
And is there a true sense of coopetition? Is it cooperation? Yeah. Is it competition? What is it?
Yeah, that's a great question. It's not a question I'm used to getting, so I have to think a little bit what I'm saying. It's a small industry, right? So there's a few mature players, maybe 4 or 5 mature players, of which we include ourselves. And we definitely do compete, but we also cooperate, right? And I think we all share the same visions that what we do really has to be interoperable and open, and we have to open up our protocols and so on, so others can use them, and we have to try to collaborate as much as possible, right? Something that I would like to see more collaboration on could be something like decentralized ID. We should have a common standard across the industry, and the tokenization industry, I think, could be in the front and create something that could be used by the rest of the crypto industry as well. Of course, I think we'll see convergence also on the protocols, but we will also see bridges. So it'll become easier to bridge one protocol and one chain to another. That's going to help all of it. And I think that generally, I think we all share the same underlying ideology about the chain, right? So I think we are collaborating much more than you'd see in the normal financial services industry, actually. So I'm positive.
And maybe I can add a point to this, Patrick, because I think sometimes we're our worst own enemy in saying that we are operating in a small market, because let's face it, we are talking huge volumes of potential assets that can be tokenized. So we're not operating in a small market. No. Maybe the volumes are not like the traditional financial markets, but let's say 1% of the world's assets are tokenized now, about $1 trillion, maybe, if you count everything and including crypto. That means that 99% will be tokenized within the coming years. Yeah. So we're not fighting against one another for the 1%. We're cooperating to bring the next 99% onto chain, to democratize investments, to enhance asset liquidity, to just have more efficient asset management, and hopefully for the likes of me and people without millions of dollars within the space, also being able to actually invest in alternatives from a normal person's perspective. And I think that's the killer application, is whenever me and my colleagues and friends can actually go and buy the same stuff that I'm investing in as a professional investor.
Well said.
Yeah. And we need that, not only to democratize access to the alternatives and bring liquidity into the small to medium size markets, right? So, where there really is a difference in cost of capital, there really is the availability of capital, but also bringing financial products to unbanked parts of the world, which is enormous, right? And this is where we see stable coins as a real value proposition. And it is interesting to me, the coming from the United States and being in Copenhagen, even last night at dinner, there's a real difference politically between how, that owning crypto is almost a political statement in Europe, whereas in the US, there's nothing political about it at all, right? Like Coinbase's comment is 52 million people own crypto in the United States. It is what it is, and this has nothing to do. Technology doesn't have a political affiliation, right? But in Europe, there is almost this political sense of, why would you want to own crypto? Isn't this bad? And those who do, it's almost like it's seeking to push them into the fringe, right? And then so here's crypto, and then over here is blockchain, right? And maybe a little bit more in the middle. But why is there this political attribution to crypto in Europe?
This will be very opinionated, Patrick, but I think at least from a Nordic perspective or a Danish perspective, and this is my own opinion, is that we've become a little bit fat in the sense that we're very happy in the place that we are. We don't have the drive for the next big thing, and that also inhibits us for actually looking 2, 3, 4, 5, 6 years down the road. And I still think there's this drive in the southern parts of Europe or in the Middle East or in Asia to see into the future and actually be exposed to the future and similar to the US. So I just think we're a bit too conservative in these parts of the world, and we will certainly adopt. We'll just not be the first one to actually use.
Claus, please, do you want to add a comment to that?
No, I agree 100%. I think that's spot on.
We have a question that came in on LinkedIn, and Tom, if you can put that up on the screen. But they are asking, when do we envision that mainstream providers, administrators, custodians, AIFMs, AFMs that will be ready to participate? And I think one of the things that I always like to do is I always ask people to make prophetic statements, right? Give us not just soon, but when do we think that this is going to happen? That these mainstream providers will begin automating the administration using blockchain as a mechanism to do so.
Claus, you're better into the regulation than I am, but speaking with the likes of some of the advisory board that we have and being deeply connected within the European Commission and stuff like that, I think they ought to be ready within the year of 2025. I think that's kind of a good time frame of thinking about. Then we'll have full regulatory clarity in terms of tokenizing real world assets, in at least in Europe. I don't know if you have a different opinion, Claus.
No, I think the MiCA regulation helps a lot, right? It's sort of blue stamp of approval on blockchain technology for financial services infrastructure, right? So that's going to help a lot to validate it in the eyes of the companies. So it's going to help a lot. We don't see a lot of adoption yet, I have to say. I'm skeptical. I
think we're going to have to show this efficiency. We're going to have to be able to show dollar-denominated or euro-denominated efficiencies where someone can say, yep, I see this benefit, I'm going to do it, versus the promise of something which will come in the future in the form of secondary liquidity, et cetera. And so we're going to have to show that efficiency. We're going to have effectiveness, but also that as we build this infrastructure, I think we're also going to need to be a little bit opportunistic and where we are jumping on where the pieces of the existing infrastructure are not working.
Yes.
Meaning lending to middle market is low in real estate right now, and there's a lot of real estate developers that need project financing. And if we can plug that into DeFi protocols, that's a win. You know what I mean? That we're opening up new avenues that, because of whatever reason, where we are in the cycle matters. And I'm going to do kind of and I'm sorry to be so, I want to draw some of these distinctions out, but I will say yesterday at dinner, I also heard this conversation that we were talking about CBDCs, and our friend Greg from Humla Ventures was making the comment about that a central bank digital currency is a form of a surveillance coin. And the comment that was made to me is, that's just an American problem, that visibility on that, which I found to be an interesting view, right? But Claus, you shake your head no. Please talk to me about that.
It's not just an American problem at all, right? It's a global problem.
Yeah,
I think there's a lot of people that fear the worst.
Yeah, and I mean, and particularly when you start thinking about some of these authoritarian regimes, and you can define authoritarian, whether you're talking about, I think if you're a trucker in Canada, you think Canada's an authoritarian regime. You know what I mean? But particularly let's use China as an example, right? Where your social score can be directly connected to your wallet, and you're only allowed to spend at certain things. Those are not future dystopia things. Those are today, where your social score is connected to your wallet, and if your social score is below a certain amount, you cannot get on a train, you cannot buy a plane ticket, you cannot, you can only buy certain, food, certain things, but you can't buy other things, where they don't think you make enough money to spend money to go to a yoga class. I made that up about a yoga class. I don't know what it is, but you know what I mean. Something that they view as discretionary. That's a reality on the ground today, and this is where, you see the negative side to it. But if we take the positive side to it, how do we get the crowd and the network collectively adding its value to unbanked parts of the economy, where we're opening up and sharing that risk, in order to provide mortgages, in order to provide financing, et cetera, that the large infrastructure players are not servicing well right now.
Yeah.
And I think as we can deliver these services collectively, Claus, you and I, plugging Inveniam into DigiShares, where we're providing collateral valuation to that real-time valuation on an asset, so that somebody can have the information for that asset, which has been tokenized, and it can be traded and borrowed against more efficiently. Yep. Suddenly we create, this next generation, and whether the big incumbents plug in or not, we build it and make it happen. Then I think that's one of the things where we're not going to wait. Do you know what I mean? No. We're going to create this new thing, and we're plugging it in. And to use, yesterday Tad gave in your conference gave the Hemingway quote, right, where it was gradually then suddenly, right? And they asked Hemingway how he went bankrupt, and he said, I went gradually then suddenly, right? He didn't tell us what Hemingway was talking about, right? But I think we're going to see, we're going to go gradually and then suddenly into adoption, and we're going to find that this tipping point, and then it's going to have been obvious, right? Yeah. Oh, couldn't you see the signs that this was happening? Where right now we're still peering at a future point, and then the moment we get to that point and we look backward, it's going to be obvious. And I do think that those who have the eyes to see can see that these elements are coming together, that your 140 clients are 40 billion of assets. These are real numbers. These aren't 4 clients that you have or 14 clients that you have, but these 140, 150, whatever it is, Claus, I'm sorry, I think I'm misrepresented there. Those clients that you have around the world, suddenly we start to see, gosh, this is becoming something that is a reality. Yeah. We have about 3 minutes left, and Claus, I'm going to ask if you have any final comments. Then Adrian, I'm going to give you the last words about how we are going to make blockchain in Denmark or an epicenter, right? But Claus, why don't you, any last comments you have?
Yeah, so Chainalysis and MegaDAO are Danish initially, right? So we have done something, I think, but they also maybe left Denmark quite soon after. We have a client that just a few days ago raised 100% funding for the real estate property in 10 minutes. So that's another great use case, and it's starting to come, right? So I'm pretty sure that once we see these use cases, we get them out there so people can see it, both on cost saving, automation, fractionalization, democratization, fundraising, and liquidity, right? Then it's going to happen. I think it's a no-brainer.
Well said, Claus. And Patrick, maybe I'll use your words. I think we can't sit here and wait. It is here. The infrastructure is there. It's built. It works. We just got to go out and take it and knock down some doors, because sitting around and hoping for the best is not a strategy. It's wishful thinking, and I think we have to go down and knock some doors down together with the likes of you. And if time permits, it's Patrick, I always love this story you tell about Disney, because it is such a great story, and it can really help you wrap your mind around how big the opportunity is to tokenize real world assets.
Yeah, and these it doesn't matter what large corporation we're talking about, whether you're talking about a university, a nonprofit, a healthcare system, or a corporation. So many of them have these legacy assets that they fully depreciated down to zero. and they have these assets that are worth, in some cases, millions, in some cases, tens of millions, hundreds of millions, or even billions, and they've written these down. And so let's just use JP Morgan as an example. JP Morgan's headquarters, they hold that $1 billion asset in FF&E right alongside where they keep all their used laptops. That's the line item, right?
Yeah.
And they hold that asset at under $1 million, and it's a $1 billion asset. And because of the accounting treatment and the inability to get a mark on a quarterly basis, they do not have the ability to carry that asset at what it should be carried at from a true representation. And any pension that's holding real estate, and they love to hold real estate because it throws off income and it appreciates, but because it's depreciated, they don't show it for its true value. And what that does is that overstates the OPEB in the US, the unfunded pension obligation of their contributors, right? It overstates the liability because of a lack of data. And these are just a few of the things that we can fix that we think are coming. But at any rate, guys, both of you are in offices not 15, 20 feet away from me as we sit here in Copenhagen to manage this. But boy, what a pleasure to be with you guys here. And it's been a great 2 days. And thank you for being on the podcast with us.
Thank you.
Thank you, gentlemen. Thank you.